In this video, we're going to talk about the current crypto market overall. We're also going to dive into the Bitcoin price chart, and then we're going to go over some news articles. One saying JP Morgan says the crypto market sell-off is being driven by retail investors. This one stating that BlackRock is seeing sovereign wealth funds and pensions come into Bitcoin ETFs. Jack Dorsey's block is adding more Bitcoin to its balance sheet, and their plan for doing so. And also this final article about Tether entering transaction surveillance partnership with Chainalysis as regulatory pressure mounts. And we're going to go talk about what all of this means. And if you find any of this interesting or want to know more about it, then you should definitely stick around. Jumping into the market, we're going to start off by looking at a current Bitcoin price chart. As you can see, we are recovering from yesterday's sell-off, or the past few days of sell-off. We're currently now up 5.75% from the bottom. So it looks like Bitcoin went all the way down to 56,500, and now we are at 59,800. And it looks like we have gone to 60,000. So we are recovering from that brutal selling that we've been seeing over the past few days and the sell-off of all the other coins. Now jumping back onto CoinGlass, we're going to go over the open interest. The open interest currently is up 2.5%, but we are seeing that the volume for the futures is currently down, and 24-hour liquidations are also down. Which means we have rinsed out a lot of the leverage that was in the market, which is better overall for a more healthier market. We see that the crypto fear and greed index now is at 48, so it looks like there is a bit more excitement for buyers coming in now, as you can see, because the price chart is also going up. And coming just down to the cryptocurrency data analysis here, Bitcoin is up 3.94% over the past 24 hours. ETH is at 2.9%, BNB 3%, Solana 8%, and Ton 11.62%. We are seeing other coins also showing signs of recovery that are in the top 20. We can go on to the next page here. We see that overall, just in general, most of the market is showing green, which is a good sign for holders out there. Or people who bought the dip, congratulations, because now you're in profit or making more profit from that purchase that you just made yesterday. Also, going down here, we can look at the heat map here and see which coins have had the most volume over the past 24 hours, and of course Bitcoin is going to be at the top as always, followed by Ethereum, and then we have Solana as well. And looks like Pepe is also showing a lot of volume previously, as well as the Doge. Doge. Okay, now going here to the Bitcoin ETFs, we see that Grayscale is still selling. The past one day, they have sold 2,949 Bitcoins, and their holdings have been going down over the past 7 days. So let's thank the bug eaters for also supporting other bug eaters for selling their Bitcoin to them to ensure that we will all have to be eating bugs in the future. And so expanding this chart here, we can see that most of the price changes in these ETFs have all gone up over the past day. We are seeing that there are more volume coming in, but we're also seeing a lot more turnover here in some of these other exchange traded funds like Valkyrie Bitcoin Fund and the Wisdom Tree Bitcoin Fund. But overall, we are seeing that these ETFs are being traded, and they are seeing some positive price movement along with Bitcoin as well, which you would hope so, because if Bitcoin's up, you would hope that these ETFs would also, prices of these ETFs will also reflect that. Taking a look here at the total Bitcoin spot ETF net inflow, we see that over the past week, we've been seeing tremendous amounts of selling pressure of the Bitcoins, and coincidentally, the price of the Bitcoin has also seen some decline as well. So as you see, the more people that sell, the lower the price goes. Whoop-de-doo, not a surprise. And on the other end, you saw massive amounts of buying when the ETFs launched, and we saw Bitcoin go from 50,000 to all the way to 74,000 at its peak. And now we're just seeing some people taking profits in the short term. But we're going to talk more about that because it looks like Goldman Sachs, but JP Morgan is saying that most of the sell-off is actually done by in retail investors. So we're going to go over and talk about that. All right. Okay, now jumping into this article written by JP Morgan analyst. It says the crypto market sell-off was driven by retail investors. Crypto markets have seen significant profit taking in recent weeks, with retail investors playing a bigger role than institutions, the report said. JP Morgan maintained its cautious view on crypto markets. The bank said retail investors have been taking profits in recent weeks. The market is still faced with headwinds such as elevated positioning, the report said. Now, going into the article here, Wall Street giant JP Morgan said it's keeping cautious stance on cryptocurrency markets in the near term due to a lack of positive catalysts and because the retail impulse is disappearing. The bank notes that retail investors sold both crypto and equity assets in April, and spot Bitcoin exchange-traded funds have seen outflows. The three headwinds the bank has already identified: elevated positioning, high Bitcoin prices versus gold, and versus the estimated Bitcoin production cost, and subdued crypto venture capital funding, are also still in place. Cryptocurrency markets have seen significant profit taking in recent weeks, with retail investors playing a bigger part in the sell-off than institutional investors, the report said. Bitcoin fell 16% in April, the biggest monthly decline since June 2022. Investors sold U.S.-based spot Bitcoin ETFs at the fastest pace ever on Wednesday. 11 ETFs saw a cumulative net outflow of $563.7 million, the largest since the fund started trading on January 11th. With regards to institutional investors, it has been mostly momentum traders such as commodity trading investors or other quantitative funds taking profit on previous extreme long positions in both Bitcoin and gold. Analysts led by Nicholas Panegertzoglu wrote. Still, analysis of the futures market suggests a more limited position reduction by other institutional investors outside quantitative funds and CTAs, the author wrote. Now, we are seeing that much money has blown out of the market, but also we know that Grayscale is offloading a lot, and I'm guessing they're referring to that, but most of those selling that we're seeing is being bought up by BlackRock. So I don't see why that would cause so much selling. And to me, I can say that maybe retail is causing the sell-off, but I believe that whales have a way more large influence on the price of Bitcoin than retail traders. But I feel also that retail traders are only looking for short-term profits, so they are taking profits along the way, whereas VCs and institutions are thinking probably long-term, like 10, 20, 30, 40 years. They're not worried about buying it and selling it, on a double if it doubles in like 3 months. They're not worried about that. But retail, for sure, yes, because they're always told that, this is the most volatile asset and it's so risky and only criminals use it and so on and so forth. So people are reluctant to even want to buy it, let alone hold a position for long amounts of time. But the more educated people become about it, I feel like the more willing they are to hold on to it for the long term instead of looking to short-term trade it all the time. But I feel like that's just going to take some time and more legitimizing by the higher powers that be, because we know that the banking system does not like it at all and they want to crush it. But at the same time, we know that they are buying it, trying to scoop up as much as they can off the hands of retail investors. So now we're going to go into an article by Ian Allison, who states that BlackRock sees sovereign wealth funds pensions coming to Bitcoin ETFs. The asset manager has been helping educate pension funds, endowments, and sovereign wealth funds about the new spot Bitcoin ETF products. BlackRock's head of digital assets said. There are some bullet points for the article. Financial institutions are holding diligence and research conversations with BlackRock playing an educational role, said Robert Mitchnick, the firm's head of digital assets. BlackRock has been talking about Bitcoin to these sorts of institutions for several years. While becoming the biggest spot Bitcoin ETF would be an impressive milestone, BlackRock says it isn't really focused on the size competition with Grayscale's GBTC. Oh, really? That's weird. Because you almost have more than them already. Don't be fooled by the first break in inflows into spot Bitcoin exchange-traded funds after 71 straight days. The current lull is likely to be followed by a new wave from a different type of investor, said Robert Mitchnick, head of digital asset for BlackRock, the world's largest asset management company. The coming months could see financial institutions such as sovereign wealth funds, pension funds, and endowments start to trade in the spot ETFs. Mitchnick said in an interview the firm is seeing a reinitiation of the discussion around Bitcoin, which turns on the topic of allocating to Bitcoin and how to think about it from a portfolio construction perspective. So now people have to put in their portfolios. Many of these interested firms, whether we're talking about pensions, endowments, sovereign wealth funds, insurers, other asset managers, family offices, are having ongoing diligence and research conversations, and we're playing a role from an education perspective, Mitchnick said, and the interest is not new. BlackRock has been talking about Bitcoin to these sorts of institutions for several years, he said. Pent-up demand for the much-anticipated Bitcoin ETFs have seen more than $76 billion accumulated across these products since their approval in January. So far, some registered investment advisors, a decent-sized subset of wealth advisory, are already offering BlackRock's IBIT ETF, but only on an unsolicited basis. The next step is expected to be the unrestricted offering of Bitcoin ETFs to clients of large wealth advisory players like Morgan Stanley. Did I just read that right? Morgan Stanley? JP Morgan? Interesting. Okay, AUM horse race. A lot of social media focus has been on the ETF assets under management, and in particular the comparison between IBIT and Grayscale's GBTC, which can be considered an incumbent because the existing BTC trust uplisted to an ETF. At last count, IBIT stood at $17.2 billion and GBTC at about $24.3 billion. A chunk of the current IBIT assets comes from the Grayscale substitutions. Other sources could be outflows from higher-priced international products in Canada or Europe, and some of it comes from Bitcoin futures ETFs being recycled into spot products. There are also existing Bitcoin holders who would rather own the cryptocurrency in a brokerage account and not have to worry about custody, tax reporting complexities, and other challenges associated with holding Bitcoin on an exchange, Mitchnick said. And while becoming the biggest spot Bitcoin ETF would be an impressive milestone, BlackRock isn't really focused on that competition, but rather on educating its clients, he said. Backing Ethereum. BlackRock filed for an Ether ETF back in November of last year, followed by CEO Larry Fink talking up the potential of tokenization, the representation of traditional assets on blockchains. But an Ether ETF raises the question of how BlackRock would go about educating clients given the complexity of the Ethereum blockchain ecosystem. Moreover, why would investors want exposure to another crypto ETF if the Sharpe ratios of their portfolios had already been boosted by a spot Bitcoin ETF? The ratio measures the return from an investment adjusted for its risk. When we think about this space, we see the potential for digital assets to benefit our clients and capital markets, with a focus in three areas: crypto assets, stablecoins, and tokenization, Mitchnick said. And these pillars, they're all interrelated. That's a really important thing for people to understand, and the work that we do across each informs our strategy and our insights for the others. Changes we'll probably could see in second paragraph. Okay, nice. Well, let's see. Very interesting article here by BlackRock. And if any of you don't realize by now that Bitcoin is now here, and it will be here permanently, you have the likes of Larry Finks of the world talking with wealth advisory players at Morgan Stanley. And we're not talking about like small players. I mean, when we're talking about wealth advisory players, you're probably looking at people who have like 200 million net worth minimum, right? So these people have large, infinite swaths of money, infinite connections. Like, they are going to push Bitcoin so hard over the next 18 months that they're almost going to try and make it seem like you have to have this asset in your portfolio. And you're already seeing it happening here. I just watched something. There was like an ad at airport at a larger known airport where BlackRock is posting its Bitcoin ETFs along with Fidelity. But we know that BlackRock has a lot more influence in the grand scheme of things in terms of like owning airlines, large companies, even your, transit stations, buses, taxis. I mean, anything that you can imagine, BlackRock probably owns or owns a part of. So they have influence and control, even real estate. So there is not a sector or a place in America that they don't have some type of influence or control over. So when it comes to the capital markets, especially, Fidelity and BlackRock are like the largest holders. I think they hold like 70% of the S&P 500 in their portfolio. So just goes to show that like if BlackRock is trying to push it to clients, then that's probably what they're going to push to the rest of the population as well. So just be prepared for all of the ads and commercials that are coming. You're already starting to see them now. We're going to see a lot more, I feel like, the further and further on that we go in time. So, and now finally, I'm going to talk about Jack Dorsey and this article written by Stephen Alfer addressing that Block will be continuing to DCA into Bitcoin, and now they're presenting a roadmap for others. So let's go on with the article. The company announced the news alongside its first quarter earnings report on Thursday afternoon. Payments firm Block has begun a dollar cost averaging program to add to its already sizable Bitcoin stack. Led by CEO Jack Dorsey, the company in April began using 10% of its monthly Bitcoin-related gross profit to buy additional Bitcoin, with plans to do this each month for the remainder of 2024. For perspective, Block had $80 million in Bitcoin gross profit in the first quarter, according to its earnings results. Were that level of profit to continue through the rest of the year, the company under this program would add another $24 million worth of Bitcoin to its balance sheet. Block already has substantial Bitcoin holdings, having purchased 4,709 Bitcoins in October 2020 and another 3,318 tokens in early 2021. At today's price of about $59,000, that Bitcoin is now roughly $4.7 billion. Jeez. Alongside that news, the company also released Bitcoin Blueprint for corporate balance sheets, in which it describes the process through which it is able to acquire large amounts of the crypto without unduly moving the market, and how it custodies, insures, and accounts for the holdings. Now, let's click here and see this document. It is only 4 pages long, so if you bear with me here, I guess I could... now, I'll leave this up here for you guys if you guys want to take a look at this, the Bitcoin Blueprint for corporate balance sheets. But I can just go over the summary here. Okay, the summary, this memo provides an update on Block strategy for company-owned Bitcoin held for investment purposes, including the historical purchase, execution, storage mechanics, and insurance and accounting considerations. We also provide an overview of our new corporate Bitcoin purchase program and the launch of Square's Bitcoin conversions product. We view Bitcoin as an instrument of global economic empowerment. It is a way for individuals around the world to participate in a global monetary system and secure their own financial future. We've chosen to open source this documentation to clearly articulate the process behind our purchase as others consider similar moves. Now, that is really cool, and I think that people should definitely take a look at that. I wish BlackRock could show its blueprint for corporate balance sheets, but we probably won't be seeing that anytime soon or ever. But as long as they're buying, I guess we can say that's good for holders. Now, in other news, I want to talk about Tether, the granddaddy of all stablecoins in the cryptocurrency space, and how now I guess they're entering a surveillance partnership with Chainalysis as regulatory pressure mounts. Now, anybody who's been following along in crypto for a while in stablecoins know that Tether has always faced regulatory pressures, but they always seem to just slither their way out of it and have a reason for them not needing to show their audits publicly. Apparently, they have in-house auditing, so whatever that means. But moving on with the article, the monitoring system would help Tether identify risky crypto addresses that could be used for bypassing sanctions or illicit activities like terrorist financing, the company said. Terrorist financing. Isn't that something that banks do? Tether, issuer of the largest stablecoin USDT, said Thursday it has teamed up with blockchain surveillance company Chainalysis to monitor transactions with its tokens on secondary markets. A surveillance system includes international sanctions, compliance, and illicit transfer detection that could be associated with activities like terrorist financing, and would help Tether to identify crypto wallets that could pose risks or may be associated with illicit and/or sanctioned addresses, according to Tether's blog post. Our collaboration with Chainalysis marks a pivotal step in our ongoing commitment to establishing transparency and security within the cryptocurrency industry, Tether CEO Paolo Ardiano said in a statement. The action comes as pressure from regulators and policymakers globally is mounting on Tether for USDT's alleged role to circumvent international sanctions and facilitate illicit finance. Venezuela's state-run oil company reportedly has been using USDT to bypass U.S. sanctions. A United Nations report earlier this year said the stablecoin plays a key role in underground banking and money laundering in East Asia and Southeast Asia. USDT is the most popular stablecoin with over 110 billion of tokens in circulation. Its price is pegged to $1 and is backed by mostly U.S. Treasury bonds in the reserve. Managed by Wall Street trading house Cantor Fitzgerald, Tether yesterday reported first quarter earnings of $4.52 billion. Holy smokes. First quarter earnings, they earned $4.52 billion in the first quarter. That is absolutely mind-boggling. Now, okay, coming back from that, okay, so here's what I want to know. Okay, what was Southeast Asia? How did they launder money all the time before 2009, right? Because Bitcoin came out in 2009. Tether actually came out in I think it was about 2014. I may be off by a few years there, but Tether's only been around since, say, 9 years in human history. So for them to come after USDT is kind of strange to me if they are concerned about that, because if anything, they should be concerned about how they have been laundering money for the other 100 to 200 years before Tether came into existence. You know what I mean? But I understand that we want to have more good actors in this space because there are a lot of scammers and criminals that will use whatever technology or system they can use to launder money. Even casinos are a big place, and those are legal. So very strange to me how this internet digital money is more of a concern. Hopefully it's not, but I guess they're just making sure that crypto isn't, rampant with scammers and criminals using the blockchain. And so that wraps up everything that I have for you all today. I hope that you guys enjoyed this content and found it informative. Remember to always like, subscribe, and leave a comment below if you guys have any questions or anything that you guys would like me to go over in the future. I hope you guys have a wonderful day. And remember, as always, keep calm and crypto.